We recently released our Africa Year Ahead Outlook. And between Neville and I, we actually had a chance to look at some of the top themes that not only impacted 2020, but we had the extension to think about how it is these will flow into not only the course of 2021 and 2022. Now, normally we would start off with a narrative on growth, but this year, the fiscal space in which most of our governments find themselves as a result of this pandemic and the fact that they've had to spend copious amounts of either dollars or their own local currencies in ensuring that they can maintain expenditure in their domestic economies has become a big theme. And it'll be the first theme in which we speak of today. If you look at economies such as Namibia, Botswana, Zambia, they entered this crisis from a perspective in which their economies were heavily reliant on government spending. They have been forced to increase these amounts, not only to contend with the pandemic, but also to secure that expenditure into key social sectors, such as health, notwithstanding education, notwithstanding sectors such as telecommunications, which has anchored most of these economies during the course of 2020. We expect this then to continue into the course of 2021 and 2022. Some of our other larger economies have faced different challenges, such as Ghana and Nigeria, where they not only relied on the revenues that they were receiving from oil production, but they too had to continue spending during the course of 2020, a view in which we think they will not be able to contain as the next few years come, simply because the economy needs to be supported. Now, having understood the fiscal backdrop, we can now start looking at some of the other things, such as growth. So what about growth? Amongst the bulk of our countries, we're seeing a glimmer of sight in terms of economic growth in 2020 in environments such as Kenya, but across most of them, they've entered effectively into a recessionary environment. It has seemed, though, as we've drawn into the third quarter of 2020, that most of our economies have bottomed out. And next year, we should start seeing slight growth of about 1% or 2% across most of our economies, extending larger to other economies as well, such as Ghana and Nigeria, which might grow at a bit of a faster pace given the size of the economies. This doesn't necessarily take away from the fact that there's been deep economic destruction. And so the numbers we speak of a rebound, really is more economies trying to stabilize given the level of economic destruction that took place in 2020. And as we know, there's been a hoard of cheap cash with monetary policy having dropped. In fact, in certain instances, we've seen about 275 basis points cuts in interest rates in some of our economies. And this monetary stimulus will inevitably not only support businesses and households as they think about spending over the next few years, but it has offered a strong anchor to support them through the crisis and potentially afford them with an ability to borrow and hopefully invigorate the economies into 2021 and 2022. But what does this really mean for our financial markets? What does this mean for FX? Neville, we have seen these adjustments take place during 2020. What can we expect from a currency perspective? But then what also can we expect from when we look at our Eurobonds going into 2021?
Well, the FX market is going to be very interesting, and thanks for that, Daniel. Yeah. And I think that stems from what we're seeing from a global perspective, where the consensus narrative to which we subscribe to is going to be of a weaker dollar because of the monetary stimulus that we're seeing out of the United States, loose fiscal policy, and general tailwinds that we're seeing for the global economy, therefore spurring individuals to take risk into some of the riskier parts of the investment universe. So I think that is going to be a real tailwind for the FX within the African markets. But that's not to say that we're going to see broad-based currency strength across the continent, but rather I think there's going to be less pressure on the specific nominal currencies. But of course, here we're talking about African generalities, but I think the key issue here is that FX drawdown, I think the pressure on that particular metric is going to be relatively less in 2021 compared to 2020.
I want to cut you short there because you mentioned something, and you and I have been chatting around this. When you speak about FX drawdown, two economies come to mind, Nigeria and Zambia. Yeah. What do we expect going into 2021 from an FX perspective for these markets?
Well, those two economies couldn't be any different, apart from the geographic distance, of course. And I think Zambia, the reason why I mentioned that is Zambia, of course, getting into the crisis, as you mentioned, was already on a fairly difficult footing, whereby FX reserves were down in the sort of $1.5 billion mark. And from an import cover perspective, barely met the 3 months that is recommended. Nigeria, on the other end of the spectrum, has got sizable FX reserves, I think in excess of 5 or 6 months import cover. So they were fairly in a good position to be able to handle the pressure that we saw in 2020. And I think the currency performance that we've seen for the Naira and the Kwacha really reflects that reality, whereby in Zambia we've seen significant currency weakness against the US dollar. But in Nigeria, it's been managed. Yes, there's been some weakness, but it's been controlled. It's been managed by the Central Bank of Nigeria. But I think getting into 2021, those themes may very well continue to show themselves strong. So if we look at the Zambian Kwacha, for example, by our own forecast, that might actually weaken anywhere between sort of 12, maybe 13%. Whereas the Naira, best case scenario, we're looking at 2-3% weakening, not because there's no pressure, but because the Central Bank of Nigeria has got the firepower to be able to manage that pace of currency weakness.
And I think that's going to be an interesting theme for us. We're seeing a lot of these central banks have had to, I like the term used, manage a lot of the currency movements. And I think it's a key distinction from what we're seeing in the global markets where, currencies are sort of left to free float. But having had that context for FX, how is it that you're positioning 2021 from a Eurobond portfolio? Are there certain key markets that you think will offer not only sizable returns from a Eurobond perspective, but also from a local or domestic market perspective across the continent?
Well, the two markets are going to be very interesting. So local currency and hard currency. Yeah. I'll start with the Eurobonds or hard currency. I think that for me is relatively interesting. If you look at the technicals right now, if you look at on aggregate where yields are compared to pre-pandemic or the sort of March sell-off that we saw, yields are back to those levels. And really that is a function, as I mentioned, of what we're seeing from a US stimulus perspective, the Fed really stepping in the manner and the magnitude that they did to support the global economy. And of course, the weak dollar theme that we're seeing. And I think that's really going to play out within the risk assets perspective. So we are of the view that yields are going to continue to compress as we get into next year. I think the risk spectrum that we're seeing from a global perspective is going to be significantly less. Obviously, hopefully we don't deal with another pandemic, but that said, I think we are in this environment where emerging markets, the investment thesis is very much strong, and I think that is going to benefit the hard currency space. But that's not to say you buy everything that is Africa. I think there's going to be significant points of differentiation across the continent where some economies are getting into IMF programs, some are dealing with defaults, and I think that really shows that one has to be continuously discerning in terms of the credits in which they actually own and buy. But I think that said, though, there are some key economies that are a favorite of ours. So the likes of Egypt, I think, backed by a strong macroeconomic story, Ivory Coast, Senegal, I think those are going to continue to outperform. But the really interesting one, Daniel, that I'm really looking at are credits that are exposed to oil. So Nigeria, Gabon, Angola, I think those are going to do fantastically well as physical demand for oil starts coming through on the back of the vaccine rollout that we're seeing. So I think those are going to be quite interesting for us to watch as we get in the office early next year. And you mentioned local currency, the investment thesis around that. And that is a very interesting one, to put it mildly. I think the degree of idiosyncratic risks and drivers that we're seeing across the continent really exacerbates how one has to be really careful in terms of which markets they actually enter into. From where we sit, the markets that I do like, again, Egypt backed by strong fundamentals, Ghana now that elections are out of the way, Kenya potentially entering into an IMF program, so that sort of de-risks that environment. But of course, the ones that worry us, Zambia goes without, I don't want to get into the details of that at the moment, but for obvious reasons, that's going to be concerning. Of course, they're going to be getting into elections, defaults, etc. And then, of course, Nigeria. Nigeria is an interesting one in the sense that, yields are extremely low, disconnected from where inflation and where the macroeconomic fundamentals are. So it'll be interesting to see whether the Central Bank of Nigeria manages to actually correct that situation so that the risk-return matrix are in line or at least favorable for foreign portfolio investors to start putting in some cash into the market. So I think the key theme that I'm trying to put across here is that there are a lot more nuances when it comes to local currency investing compared to sort of hard currency investing within 2021. So a lot of differentiation there.
Yeah. And I think just more on a fundamental level, one of the points we raised earlier, while these are some of the markets that proffer a lot of opportunities from a yield perspective, there is some opportunities that we're starting to see across some of our other economies. So Mozambique has been a big country that we've been watching this year. We know that they've dealt with a lot of social and political unrest, but if you look at the recent budget that they did release, there's going to be a lot of spending into some of these economies. And I think that there are opportunities there, if you think about how economies are going to be spending relative to the economies, that will offer a lot of institutional opportunities for corporates within these markets to be able to be part of the narrative that tends to always come after a deep recessions that we've seen across Africa.